Welcome back, people, to another sensational podcast with MYB. By looking at the title, you guys know where I'm coming from. The stock market, how to protect your capital, avoid taking screenshot and take profit. Your plan is fine, your strategy is fine. It's only the problem is, but before we get into the problem, you got to give thanks, man. Give thanks that you guys understand the cycle of human brainwash. Give thanks that you're alive. Give thanks that you're alive and blessed. You're grateful. You're courageous. You're strong. You're wise, people, right? You're disciplined. You're building legacy. You're building growth. Like I said, people, right? Be appreciative for the small things, bro. Because life only so short. You may think life is long, but life is only so short. Fun fact, let's say hypothetically, you can see how long you have to live on your forearm. What would you do different? Would you work harder? Would you work less? Would you quit a job? Would you make a difference? Right? Same with trading. What would you do different in trading? Would you take less trades? Would you risk more trades? Would you wait for that good setup? Would you be more patient? So like in today's session, we're gonna talk about people. Stop taking screenshot, take your profit, control, not even control, be aware of when you press buy and sell. That's where the magic happen in trading. The magic don't happen in trading about the technical analytic people. No, the magic happen the moment you press buy or sell. Because the moment you press buy and sell, we all go through the what? The panic, the fearful, the hope, the greed, right? All of those ties with the psychology into the market. Bro, because if you think about it, you are already a profitable trader. I am a profitable trader. You are a profitable trader too. You guys just lack control of it, right? You're letting the stock market control you. Because realistically, bro, if you're not scalping, intraday trading, swing trading, invest in yourself, get dividends in yourself, right? So, like I said, bro, your strategy in the market is fine. What you're doing is right, right? You just got to be aware of what is really happening. And don't be so caught up in over trading, bro. Right? You already overtrade 2 years ago. You already overtrade 1 year ago. Look at your journal and you should be like, oh shit, he right. I overtraded last year. Why am I still overtrading? Right now, you should be taking less trades, bro. Realistically, you should be taking maybe 1 or 2 trades per week. It's not because you want to trade per week, it's because that's how the market goes. Because if you think about it, right, do a quick recap of Monday chart. Monday chart, Tuesday chart, Wednesday chart, Friday chart, Bitcoin, Saturday chart, and Sunday chart. All of those charts are different every day, right? None of those days are pine. No matter what strategy you got, nothing really matter. All you gotta do is press buy or sell and hope you're on the right side of it. If you're on the wrong side of it, you have to be willing to cut your loss short, right? How much you willing to risk, that's you, right? And when you're on the right side of it, you have to be willing to let it run to a supply zone or demand zone. Because technical analytic is fun alone, but like I said, your strategy is either two strategy. One that I normally, I mean, it's that's millions of strategy. Truth be told, it's millions of strategy. But the two main common strategy is the breakout structure, right? If price going down, let it go down. Wait for it to come back up into a 50% gap. Wait for a retest. As long as the retest, as long as the previous high don't break the previous low, price go back on the uptrend. Right? You enter there and then you ride it. And if price break past, your stop loss is going to be below the previous low. Right? So, for example, to understand a trend, you have to understand market structure of higher highs, higher lows, higher highs, lower high, lower lows, and shit. Right? Then you can understand the market structure or breakout structure. Or you can go off a 6 line folder. We have the previous day high, previous day low, mark that up, boom, boom, go back on the pre-market, mark up the pre-market high, pre-market low, bam, bam, then go into the 5 minute open, mark up that, bam, bam. So now that's 6 lines. Now you wait for price to open up the 6 lines, and then you wait for a retest, touch the line, you enter, right? But like I said, that's just like additional armor to your tool. Or you can just drop a demand zone, go on the 50-minute chart, go look at the demand zone, supply zone, and just trade when price hit the demand zone for put, price hit the demand supply zone for call, right? But all that is all fun and all. Like I said, you know that, I know that, right? It comes down to when you look at your money and Robinhood, when you look at you up, like, oh shit, I'm up $300. I should sell. Fuck it, I'ma sell. But the moment you sell, you go in the chart. Oh shit, price didn't even hit my TP yet. I'm supposed to hold this shit. I'm supposed to still be in the trade, and then price do go to your TP, right? So that $300 is supposed to be maybe 850, but you sold. You wouldn't even sold too early. You just sold because of emotion, of fear that you didn't want to lose that $300. Vice versa, if you're down $300, instead of sell it, instead of cutting your loss when you was probably down $100, you was hopeful that the trade is gonna come back. You're on your knees praying to God, please let my trade go to break even, then I'm gonna sell. But in reality, it keep going down. And then when you decide to sell it, like I said, you sell it for $300, which your plan was to sell at $100. So that have nothing to do with the plan. You know what I'm saying, people? You understand the technical part of it. But when it comes down to the buying and selling, you look at your portfolio, you be like, damn, I'm down, I'm up, right? Because realistically, I get to the point of you don't even have to day trade, bro. All you have to do is wait for Monday come. As soon as the market open Monday, just buy a call for Friday. Buy a call for Friday and buy a put for Friday. And just leave it, right? Either one of those holes is gonna profit because the market will go up or will go down. Worst case scenario, it just consolidate, right? And as the market go up or down, which either want to profit, just sell it off. You don't have to wait till it expire on Friday, because let's say you buy a contract on Monday, right? Monday open at 9:30, 8:30, whatever. You buy a put for Friday, it calls for Friday. Then Monday the market go up. The market go up. Your calls what you buy made $40, right? Your calls made $40, but your put on the other hand maybe lose $30, right? You lose $30. So what? You take the profit on the puts, I mean on the calls, or you sell the puts and ride the calls, or you take profit on the puts on the calls and you ride the puts because you have the whole week for that put to make back up, right? But you have to be willing to risk the whole portfolio. If you're not the whole portfolio, but that's why when you're buying, at least buy a cheap contract. So let's say you buy the contract for $20, $50, right? You're willing to risk the whole $50 for the whole week, right? $50 for the whole week. So worst case scenario, you lost $50. At least it's a contract, it's secured by the contract. It's not on Trade Locker or Forex or Meta5 where if price hit your TP or stop loss, that is it. It's no contract, it's nothing, it's just straight TP stop loss. Then you could day trade if you want to by just setting the alerts. Like, you don't have to be scanning at the charts, bro. Just go in a higher time frame. Normally high time frame where you go to a 30-minute time frame or hour. Just mark up supply zone, mark up demand zone, and set your alerts, and then just lead the charts. Because a trend on a high time frame is a run on a lower time frame, right? So whatever the market is doing on the high time frame, the run is leading up to that. So as long as you set your alerts to a solid demand zone on a 1 hour time frame or a solid demand zone on a 30-minute time frame, when price do get to that time frame, then a real move is about to happen. Either a 30-minute move, a 30-minute one candlestick on a 30-minute time frame, and then you profit regardless, right? But like I said, that's not the problem. The chart is not the problem. The problem is when you're up, you take a screenshot, you text it to the group chat, and by the time you go back to the contract, for example, you're up $500. You screenshot the $500, you send it to the group chat, right? You are excited. By the time you go back, by the time you go back to sell it, the $500 turned to, like, let's say $450, right? You lost $50, that's why I screenshot it. And now, instead of taking the $450 loss, not take a $450 win, you was like, nah, man, screw it. I'm gonna wait for it to come back to $500 because I want to take my $500. Next thing you know, you drop another $50. Now you have $400. Now you're like, what the hell, right? So now you're still holding. Now they're going to $350. Then you say, man, screw it, I sell. So now you sell at $350. But your screenshot that you send in the group chat say $500. Let it make sense, people, right? Don't be so caught up of valuation from other people, right? Because Loki, that screenshot you send in the group chat, those people in the group chat dislike you for that, right? They dislike you because you're winning, bro, right? They don't want to see you winning, bro, right? But win so much in silence that when you do get that breakthrough, they have no choice but to watch you win because you did it in silence, right? Like I always say, bro, best case scenario is you teaching the shit. Like if you know the analytic shit, just make videos of it and post it on YouTube, post it on Rumble. Then when you get so good at it, in like 10 more years from now, you can look back about it. That's why what I'm doing, I already teach the analytic part of trading. So I would never, because I have a whole platform called the stock market on YouTube and on Rumble of me teaching everything you need to know about the stock market, in the stock market, particularly about the analytic chart. And I have more videos on how I'm doing this one right here. I have one called MYB stock market, so I'm talking just like this but about the stock market, so it's like more impactful shit. So I will never have to like talk up or draw up a chart because I don't have to, because I already did it in the past. So that's what you guys, same with you guys, learn it now. Because ask you guys this question: what is something I could do that is gonna pay me once? Write a book, trading, coding. All you gotta do is do it shit once, then it's gonna pay you in the long term. But fun fact about the market though, that's the only problem why you're not really profitable. You're not profitable because you're more concerned about taking a screenshot, send it to the group chat, and you're fearful and hopeful, right? And not cutting your losses when you need to cut your losses, right? Cut your losses when you need to cut your losses, and let your runners run. Let your winners run, bro. Don't be concerned of taking a cheap profit, which is $20. It's fine if you're taking profit at a supply zone or at a demand zone. Don't just take profit off random air. Don't just because you get a notification of Robinhood, you go on Robinhood, oh shit, I just sell. No, bro. If you get a notification of Robinhood, go look at the chart first. Look at the chart first. See where the candlesticks them at. Sell at an order block or supply zone. Don't just sell because your shit say you up $1,000, 3,000, 50K. So what, bro? You can be up even more. And that's not being greedy or faithful. It's just being respectful of your knowledge and your wisdom of what you know. Because you know whether you sell or not, price will go there, bro. Price will go there. But one thing about the options on Robinhood though, right? You're fighting time decay, right? So for example, let's say price going to like a all-time high, right? Or not even all-time high. Let's just say price going up. Let's just say price go up. Price go up. You look at your portfolio, damn, it's up. So you look at the contract you buy. You buy the contract for maybe $1,000. You look at it, you're up 10K, right? You're up 10K, but you didn't sell, which is fine. But price came back down. Price came back down. Price came back down. Two more red candlestick. Then it went back up. It came back down. It went back up. Right. It's playing around the TP area. Right. So by the time price do come back up to where it was, you go back in your phone. Then it's 9K. Price was at the same particular price where it's at now, but 15 minutes ago, that same price where it was at, it was at 10K. But now price back at that same price, but now it's 9K because you're fighting the time decay and shit, right? So fun fact, I always do it when price get close to your TP, especially close to your TP, just take profit, right? Just take profit because where price at your TP at is probably just 20 cents more different, 20 cents different or 40 cents different. Why are you so caught up into that 40 cents, 20 cents when you're already up damn near 95% of the trade, right? Then you can take profit because, like I said, soon as the price come back down, two candles sit down and price do go back up. The initial price that you was at is not going to be the same because you're fighting time decay. Robinhood now for Meta 5 and trade lock is different. At these, you can enter the trade. It's just stop loss, how much you're risking, and TP, how much you make. That is it. That's one fun thing about the trade locker and Meta 5. You risk $10, you make $50. There's no time decay, nothing. But the only thing about that now, when price go down and that price hit your stop loss, that is done. In Robinhood, on the other hand, it saves you by having a contract. You can buy the contract for 2 days out. Even if you buy the contract for today, and the contract do go though. You buy a contract for $10 today, right? The contract go to $10. Boom, spike in on $10. It could still recover back in a day and come back up to positive 20, right? Because you're in a contract for the whole day. On Meta 4 or Meta 5 and Trade Locker, if price hit that $10, you're done. That $10 is gone. So that's pretty much different about it. But like I said, it don't matter as long as you can control your greed, your pride, and understand what you're doing, because you already understand it, people, right? You already understand what you're doing, and I'm proud of you for that. So mind you.